Welcome to our weekly market review brought to you by ETM Analytics and TreasuryONE. I'm joined this morning by Andre Salia, currency strategist at TreasuryONE. Andre, I actually can't believe it. We're just over, it's actually our second last market review before we get to the elections. And I mean, finally, if you take all the noise that's going around that, and markets taking a very big interest into the latest developments, which we will get to in a little bit. But first off, this past week, we saw South Africa's latest inflation figures come out, moderating, still back into our bandwidth, obviously not near the center where we would like it to be, but at least below that 6% mark.
Yes, good morning to everybody. This magical 4.5% that Mr. Kanyahu had set as his target is up for debate by various economists. Rudolf Gauss is definitely in the camp of a monetary policy committee that should change a few things and thinks that our inflation warrants serious interest rate cuts. But we're expecting it to be at 5.4%, which is a little bit lower than previously expected. So the trajectory still seems to be fine for us. We are expecting at the end of this month a lowering of fuel prices, which could be positive. Then once again, we're getting closer to the 1st of July, and in July you have these administered prices in terms of rates, electricity and so forth that comes and being implemented for the consumer, the individuals. That could again be a bit of a negative one, but I think that's fairly priced in, and I hopefully not too negative. But yeah, what does that hold for us in terms of a monetary policy committee meeting next week? Well, we expect him to come out with very much the same possible elevated inflation because of food prices, because of droughts, because of maize that might not be meeting the expectations of where it should be in terms of crop size. That could have an impact on food inflation. So very much the same rhetoric speech by the governor to be expected, but no change in interest rates. Any change in interest rates will most probably fall in line with America and only expected in the later second half of this year.
Yeah, sorry, I misspoke there. I was so focused on what I was trying to say about the elections that I said, inflation came out. But yes, it's coming out this Wednesday. And we actually had a look at it as well, what the market's expecting. And we saw quite a big sell-off of inflation-linked bonds as well. So it's a clear indication that the market, like you said, is expecting that, inflation is set to ease also in the coming months with the possible low fuel prices, the better electricity that we've been having. Thank you very much for that. But from one monetary policy to another, this week we're also looking for some Fed minutes. It is the ones from the May decision. And if I remember correctly, it was at the May decision where the Fed came out very strong saying, no hikes are really on the cards anymore, although it remains very concerned that they're not winning the fight against inflation. It was at the May meeting, right?
Yes. Now, if we look at the expectations here, then they came out with, once again, more or less the same speech. Interest rates are doing its work. It's not doing enough at the moment, but they do not foresee any interest rate increases at least. And that, if we look at our graph, jumped in the sense that the market is now again expecting some relieving of interest rates and some cuts coming in this year. We can remember that a couple of meetings back we were speaking and saying that it's now down to 0 cuts. It's now up to 2 cuts again. And some of the figures that was released, GDP growth in the first quarter, jobless claims, manufacturing indexes, retail sales, etc. All of those pointed to an economy that is most probably not as healthy as they wanted it to be, that you are seeing some rise in the unemployment figures, not massively, but it is there. But also heartwarming was the fact that there's no real increases in wages anymore. You know, those things all point to a possible cut, and we now, as I say, the market is now expecting 2 cuts for this year. That obviously immediately reflected in foreign exchange rates, and we had seen a weakening of the dollar over the last 2.5 weeks, and we've seen the euro almost at 109, trading currently around the 108.65, 67 levels. So that weakening of the dollar benefited the rand, and that certainly helped to push the rand to the stronger levels where we are currently trading.
And speaking of the rand, everyone's got an eye on next week's election. And this is an analysis pulled together by ETM Analytics, where we just sifted through some of the poll data to conjure up some of the scenarios, because quite frankly, no one is exactly certain what we can expect. We don't know what it could look like. But actually, just before we started the podcast, the latest round of political debacles came out. Zuma has been officially disbarred from standing as a member of parliament. The Constitutional Court has agreed with the IEC, saying his 50-month suspension or sentence that he received in 2021, still stands, and that makes that he can't run for parliament, which could make things interesting for the MK party, especially in KwaZulu-Natal. But just getting back to the slide, so these scenarios and how it could play out on the rand, it's difficult to pinpoint exactly, because there's so much uncertainty baked into each scenario. And at this point in time, it seems like scenario 1 is going to likely play out. We're seeing a massive surge in the polls for the ANC. We know they've got this ground force of troops that they send in just weeks out of it before an election. They've always done it. So I know the polls have been testing them at 45% and lower, but it's likely that they could see 47%, maybe even more than that, and just maybe getting enough to clinch that 50% margin that they need. But if they miss out slightly, they will likely look for that coalition with the IFP and ASA, even perhaps maybe with someone like Al Jamaha. And that, I think then it becomes interesting for the rand, because then it's more or less the same, but it's still not a very happy place for the market.
No, it's certainly interesting times for us. Now, I saw on the Afrikaans news on television last night that another poll came out, and that made up for some interesting material, and they spoke to the people that's done it, and they polling the ANC currently around the 44%. So very much in line with what you've just said, 45, 46, around there. The big surprise on that one last night that I looked at came out where they were polling the MK party in KwaZulu-Natal at a very healthy 46%, and an ANC down to 11%. Now that change, any changes there in KwaZulu-Natal, we must keep in mind, is after Gauteng, the biggest
that's right,
province. So any changes there could really reflect very heavily on the national results. Now, I personally think that the 46% they're polling for MK seems to me a bit on the high side. So I would be placing the ANC around the 45, between 45 and 47%, which then scenario 1 seems to be the most likely one to play out, because simply there they would need only 1 or 2 small parties to be able to reach the over 50% and be able to form a government without too much change. But then if we look at that, then the possibility of a rand trading into the green area seems to be fairly likely. Scenario 2 also plays out to the green side fairly good. I would give that a fairly slim chance. I spoke to somebody and they said, yeah, and if the DA do go into a coalition with the ANC and they are doing better over the next 5 years, the ANC would be the one that gets the credit and the DA would not really get the credit. So I'm not quite sure of that one, but that's still a possibility. But be that as it may, if we look at these three scenarios, the very negative one, ANC, EFF, MK, I very much doubt that. I don't think we'll go that way. So I think there's a fairly slim chance of moving into that 21.5 area. But
yeah, the DA one is sorry, Andre.
No, I was just going to go be it as it may because the next graph came
yeah.
out.
Yeah, the DA one
broken below 1820.
I've had some interesting debates around the DA ANC coalition, you know, and I've heard strong arguments come out from for both sides. So definitely the second scenario, if it plays out, we can expect markets to approach it with a wait and see stance, because it can go either way. It can go, you know, they can work effectively together and will be great, or the DA can be, you know, we don't want this coalition to happen, or, you know, there's so many arguments around that scenario too. Like, I think I've heard them all. But like you said, the third scenario, I know it's the scenario that markets sometimes it gives them heart palpitations a little bit, but the news around that is that, you know, it seems highly unlikely that scenario will take place. I mean, Zuma is the star candidate of MK. He's just been kicked to the curb, basically. We know the EFF is not very friendly with the ANC, and they will be the tail wagging the dog, which I think the ANC would like to try and avoid. So, you know, as nervous as markets are around that scenario, it is very highly unlikely for that scenario to play out. But nonetheless, the rand looking better. You mentioned earlier on that the dollar softened a little bit on the back of the latest rate hike expectations after the Fed came out. Another interesting scenario that we had a big discussion about, the strengthening rand, is of course exactly that scenario 3 that we spoke about becoming clear that it's highly unlikely to play out. So, you know, we have these hedge funds which they're starting to unwind some of the risk associated with that election outcome that's also providing some support to the currency.
Yes, the risk premium on a very negative scenario after the elections has definitely subsided. And that's one of the other reasons why we are trading and have broken below the 1820 level. So now we have a week and a little bit to go before the elections. Results will start trickling in slowly, I think, this time because of the massively long the ballots that we have. And I think that could take quite some time. It would be an interesting one. But we must also remember that this year looks a little bit different, and that could also affect the election, is this 3 voting ballots that we have to contend with. So that's going to be an interesting one as to how properly that gets done by the voters, because I think there's a lot of voters that's going to be surprised when they see that don't even know about that. But the negativity is certainly subsided. The Federal Reserve will definitely, at the next meeting, I think, have the same rhetoric speech. But I do think that we have the interest rate cuts that will come in the second half of the year. That will bode well for the rand and negatively for the dollar values. And if the negative scenario does not play out on the rand, or on the elections rather, then I definitely think that the rand could move into a new band towards the end of the year of a 1718 to 1850 level, which simply means that if between now and then we do get a jump up to the higher levels after the elections and coalitions don't go the wrong way, then it would certainly be areas where exporters needs to take some value out of it.
It's an interesting couple of weeks ahead. Andre, thank you very much. The next time we speak, we will be 2 days away from the election. So hopefully we will get some answers to this uncertainty and the way forward. Thank you very much. And we will chat again soon.
Thank you. Enjoy your day.